What's going on, everybody? Today is Thursday, June 22nd, and in this video we're going to take a look at SPY and Apple from the 30-minute time frame. This is my chart entering Thursday, so I haven't made any edits whatsoever, but we'll go through candle by candle, and from there, we'll move on to Apple and go forward. I made the box a little bit smaller for this screen recording. Hopefully the quality of the video is a little bit better. I'm not really good with all this tech stuff, so hopefully you'll just bear with me on that. So anyways, if we take a look from yesterday, right after open, you see we took out this swing low dating back to last Thursday, June 15th, and we rallied higher, getting into the imbalance that was formed pre-market on Wednesday, before rejecting, creating some imbalances on the way down. So just for the purpose of visual here, I'm going to take this off. We know what that did. And now, since we opened up on Thursday right here, we opened with a gap down. I just want to put that in just to go through and make it authentic on how I would go about it. We actually did take out that low, most recent low right here, which we'll see the one that's much more noteworthy. So if we scroll over just a little bit right here, and we'll take a look over at Wednesday. If you recall, 2:30 on Wednesday, we had Jerome Powell and FOMC, and that low that was formed right at, what do we got, 433.61. So if you take a look off of open and throughout pre-market, we actually took out that low prior to market open. We make our little move back up here, continuation, and we get back up into this, which would also be a bearish imbalance. If you see it, looks like a little gap right there. You can view that as a resistance level. Wicked into it, rejects, falls back down, and this time around we hold on to this previous liquidity or previous low from that Wednesday FOMC, and that's when we start to take off. So as we make this imbalance through, this candle to me is taken care of, and in this area right here, I'm going to throw on this imbalance right here. So again, wick, body, wick, nothing going on in between on either side. This is going to be our imbalance. We make our move up and through. If you notice here, we zoom in. I'm going to zoom in a little close here, so apologize in advance to the eyes, but you can see we have a little gap here that's showing some aggression to get higher, get more towards the upside. So we do wipe out this after our first attempt at it was a rejection. Next time through, we get the gap, and that's our a little trick or a little clue that we might actually run higher. So we're going to wipe this one out right here, and we continue higher, getting into these two imbalances above right here. Wicks into one, bodies into the other, before rejecting back down lower into our imbalance that was formed off that open candle. And we continue higher yet again, getting back into that imbalance, rejecting once more, coming on down here, and just one more time for good measure, wick into this imbalance yet again, and take off. This time, after multiple tests of each of these resistance levels, they start to break down. So for example, this one was 1, 2, 3, 4, 5, 6, 7, and we finally dip back down, and on the 8th try, it is enough to give us a little juice to the upside here. So we get above it. Next candle is a sharp rejection back down into a previous bearish imbalance, the one that we filled up. So we can also look at it from this perspective here. If we're to create another imbalance just off that move that just occurred right here, we could take this off. Candle wicks into the imbalance and takes off yet again, this time enough to get us through this imbalance that was formed back on Wednesday the 21st, and up into our next level right up here. I accidentally dragged this one down just a little bit. Let's see, get it up there. Good. Okay, so we closed the day chilling out in this imbalance that was formed back on that 21st Wednesday. inside a much larger imbalance as well, and we do have quite a few above this imbalance here. Previously bullish, as we spoke about in the last video I made. As price got up to the high of that imbalance, we rejected it. That's why I currently am using it as a resistance level until I could see us break through here and deal with our next, which was the gap down into Tuesday, start of this week. So that is what SPY is looking like for me. Now, just a quick timeout here. If you would like this information to be emailed to you daily, check out my newsletter, Markets with Mando. I'll put the link in the bio. We'll take a look over at Apple. Apple had a strong day, good for 1.65%. And again, this is uncharted. Just, whatever I had going into Thursday. But anyways, here we go. So if we look, this, with hindsight, we could see that this was clearly an important level that was formed back on Tuesday at 3:30 Eastern. Wicked into it and rejected it Wednesday morning. Got back up into it Wednesday afternoon before rejecting it again and creating some imbalance levels in the process. But as we get into Thursday, we dip down into this level right here, which is the support level that was formed on right in here on Thursday, June 15th. And I'll show you guys what it looks like right here. Wick, body, wick, nothing else going on in between. That's going to be viewed as a support level. Even though we broke below it, we never had confirmation really below. So I keep those on for instances like this where they do come back and they do still carry some weight. So, but anyways, again, get into support. And right before market open here at 9 o'clock, we start to take off a little bit. And again, just like what I talked about with SPY, there's a volume imbalance right here showing some aggression to the upside. And that imbalance formed was good enough to wipe out 2 in the process, actually 3. Okay, so again, back to that level we spoke about earlier, this June 20th, Tuesday, 2:30 level, or 3:30 level rather. Get up above it. Now, inside this candle, we do drop back down, and here's your classic resistance turned support, as you can see, to the tick. We bounce back into that imbalance, take off higher, enough this time to break above that little level that came in. This is from Friday morning. That really little level. That was a 1 or 2 cent, but still valuable in my opinion. If you take a look right there. But anyways, price gets up and above, comes back down, holds on to that level again. Another resistance, turns support, and we take off yet again, creating an imbalance right here. Price dips back in, heads higher. A little consolidation candle here at 3 o'clock, and then one more time for good measure, get back into it and take off yet again. We did not get up to that swing high, or I believe it's still the all-time high, yep, at 187.37. And if you've taken note, oftentimes when we take out a low or a high, price will burn those breakout artists, people who are waiting for the breakout to kind of chase the trade, is how I look at it. But yeah, so you see same thing here. Here's your swing low from the other day, wicks through, takes off, and it's a tale as old as time. Here, swing high, take the high, reject lower. So that's where I'm at with Apple. We're almost at that level of liquidity, so we will see how price reacts to that level. The way that it would confirm for me would be if we can get whatever time frame we're looking at, an overlay of a candle through that level, forming an imbalance in the process, something like that or like that, a sharp candle in either direction. So that's all I got for today. If you haven't already, like, subscribe to this channel, and we'll talk soon.